maybe a friend calls you and you're like, I'm just, busy right now. Let me call you back. But you never call them back. So you lied, right? So small things, I think it's important to notice that because unconsciously we don't notice it.
So we are here today with Anmol Singh, the author of the book Prepping for Success, a day trader based in New York. Welcome here. Thank you for being here. It's really great to have you here and bring your experience and share it with everyone watching.
No, definitely. Thanks for having me. I'm looking forward to chatting with you guys.
So as I said already, I want to start from your book, and then maybe later we talk about it more in detail. But I saw your book, and the title was very interesting. Choosing this title for actually a trading book. Is it mainly about trading, or do you also share other stuff about life in general?
Yeah, so I mean, in this book, it's actually nothing to do with trading, although it'll apply to your trading because trading is all about psychology. It's all about mindset. It's all about being more productive. So the book is based purely on, it's a personal development book, but every single thing applies to trading because that's the biggest thing I learned in my trading career is that trading was like the biggest personal development journey that you go on, especially if you're trading millions of dollars every single day. It could really affect your mind. So if you're not emotionally strong, it could be the worst business for you. But if you're emotionally strong, then it could be the best business for you. So I think the book was all just me sharing what I've learned over the years, the things that have got me to where I am, and just sharing that in the book for other people.
100%. Yeah, I noticed that for me it was the same actually. When I started trading, and of course it wasn't going very good in the beginning, but I noticed that the more that I was working on myself and on my mindset and the way that I was approaching things, the more I will also improve on trading. So I kind of understood that, personal development kind of went hand in hand with actually becoming a better trader.
Yeah, 100%. Because I think if you're not emotionally strong and if you're not, if you have issues around money, right? Or if you have that personality that you just want to risk big or gamble or, there's a lot of things that can really hurt you because a lot of traders that they come into the business, they end up losing a lot of money, right? And then once you blow up, then you can't trade anymore. So I think it's really important to stick it through those first times and work on your mindset. And because you know what, mindset's gonna help. Even if it doesn't help you in your trading, it'll help you in all other areas of your life. So it's something that I think it's one of the most important things that is a make or break for most people in their trading industry.
100%.
So which is the main reason because you decided to write the book for yourself or?
Yeah, I think originally I wrote it for myself. So that's why I said prepping for success. So we're preparing for success, right? So I wrote it as notes to myself, like, okay, these are the things I need to do in my life for the next few years that'll get me to the results. And I did it. And then, I got the results. So then after that, I published it because what I realized is not everybody has the money to spend, hundreds of thousands of dollars going to seminars or trainings or masterminds or hiring coaches. But I was fortunate enough to be able to do that. So I've taken everything that I've learned from all the areas of that I've learned from, all the experience that I've learned from, and then just kind of break it into just small 10 keys. Because, a lot of books, sometimes they have so many stories, but they don't really tell you what to do. It's just great stories, great analogies, but what do I do now? So I think the book was all about like, okay, here's what we need to do to get the 10 things we need to do. So that was the format for that.
Great. What do you think is one of the most important lessons that you actually shared in the book? Now, of course, all 10 of them are super important if you decided to share, but which one is actually, in your heart that that you really wanted to write that one?
Yeah, I think it was the topic about integrity, is like being a man or woman of integrity, being a person of integrity. So integrity, the way I define it is like doing what you said you're going to do and then doing it when you said you're going to do it, right? Because a lot of times we say, oh yeah, I'm going to do this. I'm going to start this from Monday, or I'm going to start this next week. And then comes next week and you didn't do anything, right? That's a lack of integrity. And when we keep doing that to ourselves, where we say we'll do it and we don't, it will go into your unconscious mind and it'll lower your self-esteem and you won't respect yourself much because in your mind you keep saying, well, I say something, then I don't follow through. So if you don't believe in your own word, right, like how do we expect other people? How do we expect the universe to believe in you? So I think the first step is like being a person of integrity, doing what you said you're going to do, and then also more importantly, doing it when you said you're going to do it. I think that changes all aspects of your life. I mean, just think about it. If you did every single thing you said you're going to do and you completed it, like your life would be so much better. So I think that's the biggest key to look at. And, you know, sometimes people say, but, you know, I'm a person of integrity. You know, I do everything I say. Well, really, let's take a look. There's always things. Maybe a friend calls you and you're like, I'm just, you know, busy right now. Let me call you back. But you never call them back. So you lied, right? So that, small things, I think it's important to notice that, because unconsciously we don't notice it. But those are all things that create a lack of integrity, and that affects our unconscious self-esteem and self-confidence.
This is a great lesson, actually. I believe it's a great lesson. Everyone should actually take an example from this. I have a question. What is your advice to the people that are actually struggling with this? You know, maybe you are really motivated to actually put in the work. You thought to yourself that you're going to do something, but you're struggling. You're struggling because not all the times you're actually, you know, being coherent with what you're saying. So what is your advice on how to improve this aspect?
Yeah, I think so. We need systems, because, you know, having an intention is great. You know, having a goal is awesome. Having, you know, a motivation is great. But if you don't actually do anything, then it doesn't matter how motivated we are, how inspired we are, how committed we are. But if you don't do it, it's not going to work. So I think the biggest thing is to schedule it, right? So if you imagine, okay, what would be my ideal day? Like, if everything went perfectly, what would my day look like? And then you write it down. Okay, an ideal day would be when I complete my workout, when I spend my work on my business, when I do my trading, you know, when I eat healthy, whatever it is, you write down your ideal day. Now that you have it written down, guess what? Let's open up our calendar and let's schedule it. Because if you schedule it, then you're going to have that day. You will have the ideal day. So if your ideal day is you working out, you journaling, you work trading, you managing your business, you watching a YouTube video, you listening to a podcast, you recording a podcast. Now we schedule all of that. 7:30 to 8:30 workout, 8:30 to 10:30, you know, podcast, 10:30 to 11 this. So if you go by a schedule, then you'll keep accomplishing those things. But if you never schedule it, it's never going to happen.
Is this was actually helped you a lot in order to have your ideal days? Do you usually use, you know, a schedule, you write down at which hour you do what?
Yeah, so for me, one of the things that one of my mentors taught me is it's called the critical six. So every evening, not the night before, you're gonna write down what are the 6 things that if I did those 6 things, forget everything else. If I just do those 6 things, it'll get me the results. So every evening I write those down, and every morning my only goal is those 6 things. I don't care about the world. I don't care about anything else. Just those 6 things, and that'll move the needle forward in the company and the business. So that's all I look at.
I also read something about the 6 things. I don't know why 6, but maybe it's the right balance. I don't know.
Yeah, I think there was back in the day, there was I forgot the name of the guy. He hired another person and he paid him $25,000-$30,000 and said, hey, go out, find me the most productive system out there. Came back and he said, all right, out of everything, forget everything, just do these 6 things. And that moved his business forward. And again, he paid what, 30,000-40,000 for that advice. And I think people have that for free, just getting it done. Because sometimes, you know, you have so many things that come in the day. Somebody's asking you to do this, you get an email, you get a message, and then we get distracted. But if you wake up and you know that the only goal you have today is to do those 6 things, that'll be keeping you focused.
This is a great advice. I believe having a schedule and actually knowing at which time you do which task is super important. And thinking back, like listening to your words and thinking back to certain days that I lived, I would say that the ones that were the most productive were the ones that I actually knew what I was going to do. Maybe I wrote it down in the morning or maybe the day before. And the days actually least productive were the ones where I was just confused. Like I always have a lot of stuff to do, a lot of stuff to get done, but maybe I didn't have a schedule and I didn't write down the most important things that I have had to put on top of the list. So I was just, you know, I was just all over the place. So this is great advice, actually.
Yeah. I'm impressed by by one thing, that we are talking with a lot of like-minded people, like successful people with this podcast. And it's like that the key of success is outside the business process. I mean, the people is always looking for a business process, for something that works good, But at the end, the key, the success key is outside this process. Do you agree about this? I mean,
Yeah,
it's like you are, like you behave, like your mindset, like your, I mean, it's not like just like the business, just about the business itself.
100%. I think that's one of the things a lot of people focus on. What's the next strategy? What can I do? What's the next strategy? What's the next tactic? What's the next tactic? But I can give you all the best strategies in the world for your business, for your marketing. But if you don't do it, then what good are the strategies? If you can't implement it, if you can't execute it, because that's one of the things as well, is like, let's say I give 5 people the same strategy that's going to get them the results. Now, one person is like, okay, boom, let me do it right now. He executes fast, he implements the strategy, makes mistakes and learns from it. The other guy is still thinking, planning, he doesn't execute on it. So he's not going to get the results, even though they have the same strategy. So it's all about your ability, your personal ability to be able to execute on it, implement on it, and then also see it through to completion and not giving up in the middle. So yeah, I think your mindset is half the battle, because strategies can only get you this far.
Yeah. And I believe we can apply this also to trading. We are talking about strategies. It can be business strategies. It can be trading strategies. At the end of the day, you can have the best strategy in the world. You can be the best. You can have the best trading strategy in the world. But if your mindset is lacking, or if you're not able to stick to your plan, then of course you're not gonna get the results that you want to get.
Yeah, totally. I mean, because if think about it, like there's so many people who learn how to trade, and the strategies are not that, that different to a lot of people. We're all trading the same technical patterns, same charts. But then why is it that some traders make a lot of money and some lose a lot of money? That's purely because of the difference in the mindset. So yeah, you're 100% spot on that one.
So talking about trading, when did you actually start trading?
So I started in 2010. So sitting in, my college in my dorm room, and just started trading from there. First year I lost, money pretty much all of first year. And then until second year is when I finally got it. I was learning with a prop firm in New York City. So even though I was in London, I was trading for them and trading their money as an intern. Kind of got my start with them at the moment, and then traded for them till like 2014, 2015. And then in 2015, that company got bought out by another bigger company. So instead of joining them, I just started my own company at that point, since I've already been trading for that long. Yeah.
Which type of company, if I may ask?
Yeah, so we have live traders. So live traders, we provide training, education, courses, seminars. We give different talks, and sometimes, proprietary trading firms where prop desk, we call them, where there's like hundreds of traders would kind of like invite us to go give talks and speeches and talk about psychology and mindset and trading. So we do those types of things, and we have newsletters and, different things for traders and investors.
That's amazing. Do you actually do it mostly in New York, or you're actually traveling around the US?
Mostly it's within the US. Like majority of our clients are within the US. Sometimes we get invited, like when I was in Brunel University in London, that's where I went to college. So I came back after a few years of graduating. When I was trading, I gave a talk at that university. So it's just different sections, but majority it's based around New York, because we trade the US stock market.
Right.
So that's why we have majority of the clients here.
What better place than New York? Right.
Yeah, I mean, it's great. There's a lot of opportunity because America is pretty big, right? California, New York, West Coast, East Coast. So there's definitely opportunity. But I did that just because I started learning from the US stock market. So I just stuck with that one.
Nice.
And when did you move to New York?
I moved 2015. So before that, I was living in London. Yeah.
Great. So my question is, you're telling me about the first year where you were losing money, and then you actually started turning profitable, opening your own company, trading and everything. What actually made the switch happen between not being profitable to actually profitable trading?
Yeah, I think that's why I keep talking about mindset, is because it was basically me. I was doing stupid things when my first year. I was gambling. I wasn't trading, right? There's a difference between trading and gambling. Trading is when you've tested a system, you know the odds, you know the statistics, And it shouldn't be exciting. If it's exciting, then it's gambling, right? Good trading is often just most of the day is waiting for the opportunity to come in and not doing a whole lot. So in the first year, I was mostly just, how everybody starts. You're trying to make money and you try to do stupid things. You try to buy a lot of shares of some random penny stock. So we all do those mistakes, I think, when you come into the market. So my first year was just me battling myself. And then until I realized that, okay, this is not trading. Let's leave all of that away and let's follow a process. Let's follow a system. And then that's when year 2 is where my profitable journey began.
Great. Yeah, this goes back to what we said earlier, that at the end of the day, personal development goes hand in hand with actually becoming a better trader. So I believe this is another proof because, I know of my own story, but I see that every time when I talk with great traders like yourself, you need to improve yourself. You need to improve your own mindset, and then trading goes with it as well. Like it just improves by itself. Of course, the strategy is important, but as you said, the main thing that you needed to do was stop doing stupid things. So
yeah, for most people, I think that's the problem. They keep holding the losing positions. Maybe it'll come back up. Maybe it'll come back up.
Right.
That's hope. Hope is not a strategy, right? So it's buy and hold, not buy and hope. Most people end up doing buy and hope, where they're just holding the stock. So I think that's one of the things too. And then the next thing is not getting caught up in hype, right?
Yeah.
If you're reading something on Reddit or Twitter, oh, GameStop or AMC or Dogecoin, I'm going to buy those things. I mean, then you're playing the hype. You're trying to get rich quick. You're gambling. And that never ends well. Good trading is often very systematic, very process oriented. So don't get caught up in hype, and also don't have too much greed. I think a lot of people jump in on the next hot thing, like AI a few days ago. AI stocks were going crazy. People are just gambling, basically.
Yes. I believe that every time that news are coming out, they're actually, you should almost play the opposite. Like, this is not an advice, I wouldn't do it, but I kind of see that, every time a news is coming out, I get so many messages from friends or family. Oh, did you see this news? I don't know. Bitcoin is going up, or stocks are going up, and this is happening. Should I buy? Should I sell? What should I do? And I'm like, don't you see this is just hype? Like, news are coming out, hype, total hype on this specific sector. It's not really good to follow these things. And I believe you should always get involved before the news are coming out. Whether they're good or bad, you should always make decisions regardless of the news.
Yeah, that's what they have a saying in trading where they say, buy the rumor, sell the news. And that's kind of where it comes from, because news is often like a signal in a way for the bigger players to get out. They use those news releases to actually create liquidity and volume so that they can exit their positions. But yeah, I mean, honestly, even better is not to even trade anything that is going to be news, because there's easy money out there taking predictable trades, patterns that are slow. They're not in the news. They're not hype. They just slowly keep working. So I focus on the boring stuff that is just going to slowly work its way, rather than focusing on trading, things that are going to move quickly, because I have no desire. So don't get rich quick, right? It's get rich for sure. So that's what you got to focus on.
Right.
But this is not just for trading, but when everybody's talking about something, the business is over.
Yeah.
Yeah.
The business is done.
Yes.
Pretty much.
Yeah. I have a question. We're talking about stocks and investments. Do you also invest in some other assets, or you're mostly focused on trading stocks and on the stock market?
Yeah, so I do angel investing, so in early stage startup companies. So I have roughly 30 companies right now in my portfolio. So those are all early stages where they're not public companies, they're just startups, just like Shark Tank. So we're investing in those. So I have a portfolio of those companies that I'm a silent investor in, not really participating in the day-to-day operation of the company, but just as a financial backing. So that's something I invest in. I do a lot of options trading. I used to do, not anymore, but I used to trade, those luxury assets as well, luxury watches. I had a big collection.
Nice.
Yeah, but before, I think 2021 was it? I sold pretty much all of it, because usually when the stock market also crashes, you will see the prices of those watches also come down. And there's good money to be made in those too. There's luxury assets. So those are the three things that I do. But I would say at the moment, 80% of everything I do is in the stock market.
Okay, nice. I never heard about angel investing yet. Like I never talked with someone that is doing it. Do you have any tips and advice on what you're doing and how it works? And how you
Yeah, definitely.
evaluate actually in which companies to invest and which ones you actually don't like?
Right. So yeah, in angel investing, there's pros and cons, right? So the pro is that obviously if you hit a big winner, like a small amount can make a big amount. Like for example, if you were investor in Uber in the early stage seed startup company stages, and you put maybe $1,000, that'd be worth $10 million right now.
Wow.
Right, $1,000. So you can do the math. There's higher returns, but then the con is that majority of those companies you're going to invest in are going to fail. Right, like I would say 80-90% of investments that I make go to zero. But then I rely on one or two to kind of go big, and then that's where you make the money. So it's a bit risky. Like I wouldn't recommend it for majority of the people. It's only for people who have, let's say, money sitting in the bank. It's not doing anything. You might as well take risks with those type of money. So that's kind of the advice for that. But what to look for? The biggest thing I look for is the entrepreneur. Like who am I investing in? Because I don't care, as I said earlier, I don't care about the concept. It could be the most brilliant idea, but who's going to execute on it? Who's going to implement it, right? Coming back to the mindset. So there are some companies that are amazing concepts, right? They could be the next big thing. But then I look at the entrepreneur, I'm like, I don't agree with his mindset. I don't know if he has it in him. He's not going to get it done. Whereas there's some ideas which are not the best, but I know that this entrepreneur is driven. He's dedicated. He's going to push. He's going to persevere. Whereas other types of entrepreneurs, when things get tough, they end up giving up. So I only look at who am I investing in. So I invest in the person more than the company.
Yeah. I was about to say this because I heard many times, like, invest in people, not the business. At the end of the day, you're not investing in a company. People just view businesses as, an entity. But at the end of the day, he's an entrepreneur that is putting in the work. And if you're investing in the right person, the one person that actually wants to make it work, then you can make great returns.
So you select the companies that you put in your portfolio, or
yes.
You have some, I don't know, some advice or
yeah. So the way it'll work is like I'll get a lot of deal flow every month. So I'm in different networks and different associations, and also just people find me on Twitter or Instagram. So I'll get typically 2 to 3 pitches every single day. Like some entrepreneur pitches me 2 to 3 every single day, and I might choose to invest in like 2 or 3 every single year, right? Okay. So I look at a lot of deals. We go through them, we evaluate them, and we look at obviously the entrepreneur. We look at the idea. So the way I start is first I look at the idea. I look at if I agree with the idea, agree with the concept, what's the potential of the concept, and then I look at how difficult is the industry. Like, is it going to be very competitive? Can somebody bigger competitor come in and, destroy the business? Then I look at the entrepreneur, if he can get it done or not. And then we'll look at the nitty gritty, like valuation, what the contract says, and, things of that nature. So I kind of follow that process. And by the end of it, I might only have 3 that I like at the end of the year. So that's kind of how over the years you build up your portfolio. But the thinking is the same thing. The thinking is a portfolio thinking. Like you don't want to invest in just one startup because it's 0 or hero. But if I invest in 30, the probability is that 90% will go 0, but there's going to be 1 or 2 that go public or get bought out by a bigger company. Then I can get my money from there. So that's kind of the thing. You have to build a portfolio of companies, small amounts in many different companies.
So which is the very first filter you apply to every company? I mean, you see a lot, but you need a filter, no, for the
right. So the first thing is just my own feeling on what I think about the industry. Like, for example, recently I've been getting a lot of crypto projects come to me, right? Like crypto based, or they're building something, but I'm not investing in any of those right now. So that automatically eliminates it for me. Not because of crypto, just because the environment we're in is not the world's best right now. So that will be one where I can just instantly say, okay, not interested anymore. So I won't even progress to do the other analysis. I will just stop right there. So first is just my initial feeling of the industry and where we're headed.
So your favorite industry right now, which is, in your opinion?
Well, right now, the favorite, honestly, is anything to do with food, right? Anything to do with day-to-day utilities that people might want to use, because Procter & Gamble, as you know, is the biggest in that space, from tissues to toilet paper to, Gillette shaving, everything they own. So the good thing with that is, let's say if I'm investing, and right now, currently, I can't take the name, but I'm invested in a deodorant brand, right? So if they can get their sales to a certain point, then they become a threat to Procter & Gamble, and then which means Procter & Gamble will buy them, right? And then I'll make my money when I get bought out.
So you have a Warren Buffett approach, more or less, in this moment.
Yeah, I'm looking for companies that can get to a point where they can start annoying the bigger companies, right? So then they can get bought out, basically. And that Procter & Gamble is very popular in that industry. They keep buying out. They bought, I think, the Dollar Beard Club, Dollar Shave Club, all those companies. When they become a certain level, they get picked up. So that's the plan.
Great. That's super interesting. Actually, I want to jump back 1 second to the luxury watches, because I find that topic super interesting, and I'm actually into it as well. You used to trade them or invest in them?
No, I was trading them. Like I would flip, like 20 watches a month, usually 20, 30 watches a month. Yeah, so I had a whole spreadsheet, a whole system behind it.
Okay, you were looking to buy them at an undervalued price and looking to make a markup, or?
Yeah, so I bought them from wholesalers, and then we would either trade it between wholesalers, sell it to somebody else, or like I also know a lot of like wealthy clients that are either hedge fund managers or stuff like that. So we're always networking, and watches come up, and that's the best thing. Yeah. You're wearing a nice watch, they'll be like, "Oh, is it this one?" And you'll start a conversation, and then they'll talk about the one that they're looking for, and then I'm like, I could get it for you. I know, a person. And then usually we'll buy it, we'll kind of make it meet, and that's kind of how it'll work. I don't do that anymore because it does take time. It is time consuming, but it was just more of a passion. It was a fun thing. I made money doing it too, but it was more of like, I actually like watches. It's nice. Fun looking at them, and so that's why I did it.
Did you have a collection yourself?
Yeah, I still do. I used to keep like 20, 30 at any given time. Yeah.
Nice, amazing. Are you looking at prices usually, at how the market of luxury watches is going, or you just keep them because you like them?
No, I try to buy them that I know below whatever the wholesale price is, if I can get a good deal, and then you buy them at wholesale and you sell it at the retail price. That's your margin that you make. So a lot of people, now I have people who do it, who have kind of trained to do it, but I don't do it myself anymore.
Great. Yeah, I'm super interested in that because I got into luxury watches a couple of years ago for the first time. And I don't know, I am really passionate about it. I really like it as well. One thing that I noticed is after the crypto bull market, a lot of money were transferred into the luxury watches sector. Like prices of Rolexes, for example, went up a lot. And I kind of see a correlation between it. Like I kind of believe that a lot of people that maybe before couldn't afford or wouldn't have bought a luxury watch after the bull market, maybe they got lucky on something, or maybe they were actually good and made money. They actually put the money in some luxury watches, maybe just for fun, just to wear it, or maybe actually to invest. But I kind of saw that correlation, and I didn't know about the one with the stock market. I didn't really check that one out.
Yeah, no, most luxury assets will be correlated to both stock and crypto markets, because that's where the money is from, like if the stock market's high, everybody's happy, they're buying things, and luxury assets go up. And same thing, because we saw that if you look at the Rolex Daytona prices, they went up all the way from 2019 to 2021. But then last year, the markets were down 35%. Guess what? Rolexes also came down in price. So they do end up moving together. Same thing for cars too, is like cars before COVID were pretty cheap, luxury cars. So I bought the Ferrari California, and then 2020, when the whole lockdown happened, supply chain stopped, all of those things stopped. Guess what happened? No more cars were coming in from Italy. So the Ferrari actually went up in price. So I sold it. So we made money even on that one. And now they're coming back down. So I could just buy the same car back again and, save myself $30,000, $40,000 by doing that.
That's amazing. Was it the first type of investment car that you bought, or
No,
you
I
actually-
I never meant to invest in it. I was
nice.
bought it for myself just to drive it, but I was traveling. So I was in Dubai for like a year, in Thailand for a year. I wasn't even here. When the dealer called me, he said, "Hey, your price actually went up. Do you want to sell the car? You can just buy it back next year when you're back." So I wasn't even here. He came, he picked it up, sold it, and now that I'm back in New York, I can just buy it back for cheaper. So
Great. Amazing.
So great, amazing. So we are talking about investments. We are talking about luxury watches, about classic cars. Classic cars, did you buy or did you have a look
it
to
wasn't
classic cars
classic.
also?
It
No,
was-
yes, Ferrari was not classic, but did you have a look to the classic car market as well, or we are not
I
interested
don't have
in?
experience in classic car. My business partner, he does, because he buys a lot of like classics and stuff. I'm not a huge car person. I just like to have like just one car that I can look good in, basically.
Nice.
But I'm not a big car fan. I'm a trader, so I trade everything. Whether it be stocks, cars, watches, anything that there's a margin in, I'll do it. That's just how I'm thinking. Like my brain just works in that way.
Great. Yeah. We usually, one other thing that we really pay attention to is metals, like gold, silver. Is this something that you also trade, or that you like to invest in, or you're more into other things?
Yeah, no, I think gold and silver are great. I think everybody should have some. Like I have a lot of gold, I have a lot of silver, and I believe in it as a form of savings, not so much as an investing, because they don't really produce that great of results over long term. But they're a good, safe place where your money is not going to depreciate, right?
Yeah.
Like if you look at every 10 years, gold has always been higher. Now it might have not moved up that much, but it's a slow and steady grind.
Yeah.
So rather than having money in your bank account, that's kind of where you would just buy gold or silver and just tuck it away. So yeah, I do like that as an investment, and I think gold and silver, especially silver, I think is very undervalued.
Yeah. I'm really getting into it as well with silver. Gold, I've been investing for a while. Mark as well for a very long time. Actually, he's the one that explained to me how everything was working with the gold market. But after I started taking a look at silver, and it can have amazing opportunities, I believe, as well. It's used in the industry. It's used for solar panels. Can be a very good investment, and it's scarce at the end of the day. There's some scarcity.
Yeah, so we talk. I mean, as a trader, you have I think a lot of money in the financial system, and both cars, watches, precious metals are like a way to take out money from the financial system and put in the real economy. Just 2 hours ago, I had a video call with a woman from New York that wants to buy a real estate, a property here in the Canary Islands, to take money out of the financial system, out of the banking system, because she's scared, and that's it. She wants just to protect her money. What do you think about this?
I think it's a good approach, and a lot of countries actually, like outside of, let's say, the United States, it's a family practice. Like even like my parents are Indian, right? So they have the same thing. The approach is you make money from your business, you make money from all those things, and then buy gold, buy silver. So it's a way to take money out of, as you said, the financial systems and just tuck it either in your control. Like my dad is old school. My dad won't even buy like electronic one. He will buy like actual, like physical gold or silver and put it in like a safe. And it's a very common practice in places like China, India, Russia, even like those countries people do have that thinking, and I think it's a great way to do it, especially what we're seeing with the US dollar now, where there is a possibility that the US dollar is going to lose its space as the world's reserve currency. And you can already see China, India, Russia, Iran, Brazil, they're all buying gold. That's why recently gold prices have also gone up.
Where they have, sorry if I interrupt, where they have high inflation also.
Yeah, exactly. I mean, and that's the only hedge. And people say Bitcoin is a hedge to inflation. It's not. Bitcoin can never be an hedge to inflation because it's such a new instrument. It's ridiculous to look at like last 5 years and make that, okay, this is a correlation. whereas gold has been correlation for decades. And I think that is the only true hold of store of wealth.
Yeah, I always say the same about Bitcoin. People are like, "Oh, it's a safe haven," but how is it a safe haven? You just lost like 80%. Like, it's a good way to make money if you know when to invest, when to get in, if you have a strategy, if you have a plan on when you want to buy and when you want to sell, and if you execute the plan accordingly with the right mindset. But at the end of the day, you cannot say that it's an edge against inflation or all of these type of things.
Yeah, 100%. And especially with cryptocurrencies, it's like crypto is very new right now. It's a very, very early stages, and there's going to be leaders. And I don't think that's going to be Bitcoin. I think it's just like AOL. When internet was new, AOL used to be the most popular. Then MSN was the most popular. Then Yahoo became most popular, and then came better and faster technology like Google, and then boom, all of the others are destroyed. So I think same thing is going to happen with cryptocurrencies. Bitcoin is like the AOL or the MSN or the Yahoo of cryptocurrencies. Then there's going to be faster, better technology like Google, and they're going to come and destroy it. So I think Bitcoin's like right now, yes, I think it'll go up in price. It'll probably even go to 100,000, but eventually, long enough time frame, I think it's going to be worth $0. Yeah.
Okay. Hot take on Bitcoin. Nice.
I'm pretty confident on that, because if you really look at the facts, it can never be used for scalability in the financial system. It's just way too expensive. I send you some money and you're like, did I get it? 30 minutes later, you still thinking if you got it or not. How do you power the financial world like that? It's just not going to work. Where there's other cryptocurrencies that are like 2 seconds. So
yes, exactly. And some others are useful for certain things, like the Ethereum network, or some other currencies for transactions. They take way less time. And this happened to me. I was actually receiving a transaction the other day, and I was looking at it all the time, like, did I get the money or still pending, or what is going on? So I was like, it's kind of weird. Like, there's this whole paradigm about Bitcoin, but at the end of the day, there are better technologies, better cryptos that are actually maybe also useful in some type of ways. So
100%.
I agree on that one.
Algorand, which is like 3 seconds finality, and the transaction is also final. Whereas even in Bitcoin, even though the transaction went through, it's not final. So the thing is, if you're thinking in terms of scale, like for you and I, it's still okay. But if you're thinking about bigger financial systems of the world, moving trillions of dollars, they're not going to wait, for a transaction to be finished, or is it final? Is it not final? They need something to go like instantly. Same thing if you're going to be at a concert and your ticket is powered in the blockchain technology. Now you scan the QR code, you can enter the stadium. You don't want to wait 30 minutes. Is it final? Is it not final? Is it done? Is it not done? You want to be instant, scan and go. And I think that's where, for usage purposes, it's others better one like Algorand.
Yeah, 100%.
Do you think that AI algos are going to change somehow the trading? I mean, the Forex trading in the next few years?
That one is a very interesting. I think it already has, because algos have been in the stock market before, like the whole AI and stuff like that. I think there already is. Like if you take a look at the company called Virtu, so they're a hedge fund. They trade stocks. There's no actual trader in the company. It's all algorithmic, and they've never had a losing day ever. Think about that. So, and it's all algorithmic based. So it's already happening. But I think a few years down the line, it's going to be more accessible for you and I to, have ChatGPT write us a code or do something like that, which it already can do. I still think there's no replacement for the human element when it comes to trading. There is not only just patterns and strategies, but there is an element of feel. Like some people just have a good feel than others. I don't think AI can be taught that.
Yeah. Do you have any kind of experience with algos?
A little bit, not to that extent, but I do I have my own software that I programmed, not me, but my programmer programmed it. So we use that sometimes for our day trading, which all we're doing is we're just letting it know which stock that we want to trade and the entry price and stuff like that. And then rest it does automatically. Like it'll place your orders, it'll place your stop loss, it'll get you out if you're losing. And if it's winning, you manage the trade, you can specify it. Then it tracks your trades automatically in a spreadsheet. So that's all algorithmic. The software does that. So yeah, we kind of use that. for trading.
Jump in a second. I was thinking, according to your experience, giving speeches to traders and also coaching a lot of traders, what is the common mistake that you see in people when they actually want to become a profitable trader, they want to be good at trading, and they can't? What is the one thing that you see that is most common that actually blocks them from proceeding and becoming better?
I think unrealistic expectations. I think people come to the stock market and they've watched too many movies. They've seen Wall Street, Boiler Room, Wolf of Wall Street, and they think trading is this, oh my God, party lifestyle. But good trading is this, literally, this is what it looks like, good trading. You're in your computer, you're just waiting. You're looking to your left monitor, right monitor. You're waiting all day for your setup to happen. And when it comes, you click, click, click. That's trading. That's how exciting it should be. Right? Real trading is not that exciting. It's rewarding, but it should be very boring. So I think that's one of the things people come into with unrealistic expectations. And it's also not them to blame. There's a lot of marketers out there that pretend to be good traders. They sound really good. They have great marketing. You can follow my alert, penny stock alert, make millions of dollars, right? They're very good with that. But that's not how the reality works. So I think a lot of people buy into the hype we were talking about earlier. And their mindset is just in the wrong place and they're trying to get rich quick.
Yeah, 100%. Trading should be boring, as you say. Like, you just need to wait, and sometimes you even wait a whole day and there's no opportunity and you just need to show up the day after again. So
yeah, like today's the perfect day for us to do the podcast because it's such a boring trading day. Market's just not doing anything right now. So I'm just like waiting and I'm like, all right, I'll just keep waiting. It's fine. No problem. Yeah.
Perfect. And what do you see? So unrealistic expectations, and what are people usually coming up to you and what do they tell you? Maybe that their problem is unrealistic expectations. They just want to approach the market and become rich in just a few months or a short amount of time. But what other things, did you see any pattern in people that usually want to become good and they don't really know the path and the things that are necessary in order to become good?
Yeah, I think people who are become good traders are people who have an open mind, they have a willingness to learn, and they're okay with following systems. So like the best students that I have who've made the best traders have been ex-poker players, right? Because they know when to hold them, know when to fold them, they know the concept about risk. Because the concept of risk to somebody who's had a desk job all their life, they don't have the concept of risk, right? It doesn't make sense. And it's fine. Imagine if I had a 9-to-5 job all the time, clock in, clock out, and I'm not risking anything. So when now you're coming into your business, you have to risk your own money. That thing, not a lot of people understand or can get. That's why ex-poker players make for best traders. Also, pilots make for good traders because pilots are used to following a checklist. Okay, I got to do this. I got to do this. They follow a process very clearly. The worst people that I've found are who've had good success, maybe in their past business or past career or past job, because then they think that I can do anything. And markets, I'm bigger than the market, but nobody's bigger than the market. Market will humble you, humbles everybody. So I think you have to have the open mind, willingness to learn, and more importantly, giving yourself enough time, like not expecting to be rich in year one. But if you say, okay, I'm going to set myself a 3-year goal, okay, great. Now that's more reasonable. So I think you need to take a long time frame with your trading. I think that's another one of the things to look out for.
Yeah, you cannot think that you're going to be a good trader in just a few months when there are other practices and other jobs that you need to study years in order to get that job. For example, I don't know, doctors, lawyers, engineers. You want to make way more money than them, and you want to study just a couple of weeks, like doesn't really make sense. But yeah, I completely agree with what you said, and I see this pattern a lot as well. But I never had experiences with maybe pilots or people with certain type of jobs. But it's very interesting on how you say that maybe if they had a checklist on their previous job, they are more prone to actually doing that. Or maybe if they know already the concept of risk, they know how to manage it. This is super important because I believe that most of the time people come to the market with the same mentality with their 9-to-5 job, and they think that the more they are going to trade, the more they're going to make money. The more they are on charts, the more they're going to make money. But that's not actually the case. That doesn't work that way. It's not like the more trades that you're taking, the more you're making money. Usually it's the opposite. Usually it's the more you're selective, the more you actually just wait and be bored, as you say, in front of charts, the more you can actually make money.
Exactly. I mean, because, you know, as you said, like in a job, they're like 9 to 5 and they're always doing something in their job. But with trading, 9:30 to 4 might be sitting, and there might only be 30 minutes where I actually did something, like click, take the trade. But the rest of the day is just sitting. I think that's the hard thing for a lot to do, because they're so used to in their job by doing something all the time. Whereas here, you don't have to do anything. You just have to keep monitoring things. And then when something happens, you might only be working for 5 minutes, click, and you're done.
Right.
So,
going back for a while to the unrealistic expectations, which is, in your opinion, a realistic expectation?
So I think realistic is obviously don't expect to make money your first year. If you do, it's great. You could be lucky, right? It's awesome. And some people do, but don't expect it. So that's a realistic expectation. Expect year 2, year 3 for you to finally get it. So giving yourself enough time, number one. And number two, starting like really small. So if I'm trading millions of dollars, now you're starting, you're not going to trade. Even if you have the money, you shouldn't be trading all of your money. You should be starting really small, $10, $20, and you earn the right to raise the risk. So this week, all right, I'm only going to risk $20. Now I'm getting the results. Next week, I'm going to risk 50. Next week, 75. And you keep inching up. So if you give yourself like a 3-year timeline, by the end of those 3-4 years, you're going to be that level. But it's going to be very slow progress. I think that's the realistic expectation, is to give yourself at least 2 to 3 years before expecting any type of return. Because trading works like this. It'll be really slow. Year 1, you're probably not going to make anything, or maybe even lose something. Then year 2, you're going to start to make a little bit of money. Then year 3, a little bit more money. And then it kind of goes like this at the end of year 4, year 5, like a rocket ship up. Problem is, most people give up in about year 1, year 2, or maybe year 3, where they're making money, but they're not making a lot of money. But they forget is, with compounding and everything, the year 4 or 5 mark is when like things really take off. But you just have to be there for that to happen.
Yeah. And I asked you about, the common mistake that you see, and what is actually one common good thing that you see on the traders that you're coaching and that actually turn profitable, which is one of the common good things that you see in profitable traders that you're coaching.
Yeah, good traders have very systematic thinking. So they rely less on here's how I feel, here's what I think is going to happen. No, forget, I don't care what you think, I don't care how you feel. What's the trade? What's the pattern? What's the strategy? What's the tactic? What are we risking? So good traders think in terms of systems, processes, and breakdowns, rather than I feel that Tesla's going to go down. But your feeling doesn't mean anything. So that's the thing, is the following the process. Those are the best characteristics of traders.
Great. Super interesting to actually have more data and put it together and give to all the people that are watching us what is actually necessary in order to become a good trader, and which things to actually avoid in order to still become a good trader. I have another question. So in the Forex space, I'm mainly a Forex trader. There is a lot of popularity with prop firms. Is this something that is actually taking over as well in the stock trading market, or it's more, people are more trading their own capital?
So it was more popular in stocks than Forex. I think it started originally with stocks, and then it came into Forex. I go back and forth between those, because prop firms originally started with the stock market, but then in the stock market there's regulations in the US, SEC, FINRA, and it was a gray area, the prop firm. So that's why SEC cracked down and banned a lot of different stock trading firms and prop trading firms. So then, because foreign exchange is unregulated, that's why those people close their stock businesses, open Forex businesses, because there's no SEC, there's no FINRA looking after you, all of those things. So I go back and forth, because there's some good prop firms. Like, I started my career in a prop firm, so obviously I like that business model. The problem is, these days it's a big gray area. There's some that are, because in Forex there's no way to tell if the order actually went through, or if it's just you're trading everything in a simulation. And that's the gray area, I guess, with Forex is most people lose money. So the prop firm doesn't have to pay people money, right? So you can just keep playing like a video game and you don't have to pay anybody money. But problem happens when you become a successful trader and you're starting to make a lot of money. Now the firm has to give you the withdrawals. And that's where the problems start to come with most prop firms I've seen, is when you start making a lot of money, they don't pay the withdrawals.
Yeah. I completely understand. So it's not something that you really recommend to your students.
Yeah, I would recommend starting with it, but then now that you're making money, take the money and then do your own thing. So that's what I did, right? I learned under them, I traded under them, I developed under them, I was trading their money. But when I've started making money, then I was like, okay, I don't need to give them a percentage of my profit. Then I'll leave and I'll start my own company. So, but yeah, it's nothing wrong to start with a prop firm, but don't expect to stay there, all the time.
Yeah. And I'm just wondering, because to be honest, I invested in stocks, but I'm not really familiar with stocks trading. Like I didn't really do it much. Which platforms do you use to trade stocks?
I use Interactive Brokers, which that's the brokerage firm that I use to take the trades and put the orders and everything. And then I use TradingView.com for my actual charting.
Okay, great. Yeah, I was wondering because I heard about a lot of, different brokers. And then, of course, from the US to Europe is different. In the past, I wanted to use Interactive Brokers. Like it was like 3 years ago, I wanted to use Interactive Brokers, but I ended up for like 6 months investing in eToro, like using eToro to invest in stocks. Then after a bit, I decided to sell. I was making good profits. I made 20% in a few months, and I just withdrew everything and I was like, okay, let's get a better broker. I mean, let's go with a better platform. But yeah.
Yeah, no, nice. I've heard of eToro. I haven't used them ever, but a good thing, I guess, with Interactive Brokers is they're pretty much in all countries. They're in Europe, they're in America. They allow you to do stocks, options, futures, even crypto now, even really? Forex. Yeah, even Forex. So you can just do everything in one place. So that I like that. And they also, if you have money sitting in the account when you're not using it, they actually pay you interest to keep your money there. So that's why I just keep it there, because you get better than putting it in your bank.
Yeah, definitely.
I make a joke.
Yeah, you change subject?
Yeah. Okay. Do you invest in real estate?
Yes. Yeah, so I do. I have in vacation rentals in India. So that's like jointly with my family. So we do Airbnbs and stuff like that in the city called Goa. So it's like this island in India, beautiful beaches. So we have a few Airbnbs there. In New York, I recently sold my property. It was like a auto service center, like where people was running their auto repair shops and stuff like that. So I own that building, but I sold it, and thank God I sold it, because New York is the worst place to own a property, because the law will always agree with the tenant, right? So during COVID, like they stopped paying rent, and I can't even kick them out because that's the law in New York. So New York was horrible, and I will never buy a property ever again in New York City.
Have you ever thought about buying a property in Dubai that you talked about? Dubai?
Yeah, I've been looking. I have a lot of friends there. I have a lot of family in Dubai, and we have been looking, but I don't know, because I don't see myself living there, and I travel there all the time. But then if I travel, then I'd rather stay in like a nice hotel than my own property. So
yeah, how is the process of buying real estate in India? Do you need to have
to be resident,
have a passport, or you can just buy property as a foreigner?
Yeah, no, you have to be a resident there, or you have to have a, I guess the way to get around it is partnering with somebody, right, who is Indian. So there's two ways: either you are Indian, or you live there, or citizen, or you partner. But the partner has to own, I think, 51% or something like that. Okay. But that's how you can get into the Indian market. But it's a very cash-based business in India. There's no such thing as loans or mortgages as such. Like you have the cash, you can buy it. If not, then you don't. And it's pretty expensive. I would say it's like some of the properties are as expensive as like Miami or New York.
Really?
Yeah. There's a lot of wealth there in India. So it's a very big gap. So there's a poverty gap. So there's some people have nothing, and then some people have everything. So the people who have everything, they have a lot of cash, basically.
And what about the touristic market in India? Is it profitable? I mean,
which one? Tourist?
Touristic market. I mean, renting out apartment to tourists.
Oh yeah. 100%. Like depends on the city, right? Depends on the state. But if you're buying in where the tourists are going, let's say Bombay, Mumbai, Delhi, you're buying in Goa, which is the beach area. Those, we're pretty much full all the time. Like there's no space on the Airbnb, so those are always booked.
That's great. I recently actually I was looking at some stories of another trader, and he's Indian and he's buying some properties in India. And these days I was trying to do more research in the Indian real estate market, and it's great that we are actually getting some information from you, since you are doing it in first person. You actually investing there. Super interesting. It's a fast growing market, and I would have never imagined that some prices would have been similar to even some cities in the US.
Yeah, and I think it's easier to buy in New York, because in New York you can get mortgage, loan, all those things. In India, you have to have the cash, and India is very expensive, but you also get the returns though, like the appreciation, because it's still very developing market,
Right.
so there's still price finding, but the appreciation has been enormous. Like if you bought something, let's say even 3 years ago, 5 years ago in India, it's probably triple right now in price.
Really?
Yeah.
That's crazy, actually.
Yeah.
Wow.